Hello nieces, hello nephews, it's your Uncle Charles here, and today, after a pretty choppy week so far, today the SPY kind of broke down out of that chop zone. We're going to talk about it, but first here's the flow sentiment. I have it filtered for 500k premiums or above, and overall pretty bearish, like really bearish, 94% in the puts, okay? A lot of big money going in the puts in the middle of the day. This is around noontime. Okay, you see the big money, 2 million, 3 million. You know, this one was 8.7 million, 7.8, 7.6 million. All right, that was in the middle of the day. So overall, bearish. Now here's my Discord. That's the general chat where my group members do most of the talking and communicating. Okay, so we'll go to my first post of the day where I wrote, a thesis to prepare my members for the mindset we need to have for the day, okay? But as always, I have a bull case and a bear case where I talk about the plan. The bull case, as always, we want to look for first, a clearing of the first resistance, which when I wrote this, it was around 413.4. SPY was around 413.4 in pre-market at 7:18 a.m., which made the first resistance around 415. So only looking for calls if the 415 clears, okay? I wrote it right here. As always, look for calls on the breakout of resistance. In this case, 415, okay? Wrote it right there. That never happened. So the bear case was in play. I wrote here we can look for puts on the failure or breakdown of a support level, or you can use the back test and go tactic, on one of the support levels starting at 412. Okay, because mind you, when I wrote it was at 413.4, which SPY actually opened above that, which I had a level around 413.5. Mentioned that yesterday. So, sometime it changes a little bit. So I'm thinking about writing my plan a little later in the morning instead of writing around 7 a.m. so early, because that's when the idea is fresh in my head. So I write it early, but maybe I should start writing it a little later. Okay, so as always, we look for puts when support fails, starting with 413.5 and 412. That was the plan, okay? So how did the plan go? So you can see here, this was the 15-minute candle right here. That one. That opened, this one. And it opened and got to a high of 416.24. I had a 416.5 resistance level. Didn't quite hit it. And once again, opened up with a loss of that 415 level, okay? And you can see the next two candle treated 415 as a resistant and rejected. Now I usually don't buy puts direct off support. I like to see a breakdown of a certain level. And I was eyeballing that 413.5 level, which is this white line right here. Okay, got the breakdown of this uptrend, this green uptrend line as well. But I waited for that 413.5 breakdown, and it worked very well. I took about 80% profits at the next level for 412. Had about 20 contracts left, and then took profits on another 15 around 410, and left a small runner. It went all the way down to 407. I didn't take profits there. I wanted to wait for my trade to invalidate, which it did when 408.5 was recaptured, and I got out of my puts. All right. So one trade for the day. I missed this big up move right here on the recapture of 408.5. That's the pink line right there. And I did alert it in the group today. We want to wait for a recapture of a resistance level starting with 408.5 if we're going to be looking for calls. And I'm glad it aged well. Although I did miss it. Wasn't too happy. But I was at lunch enjoying the sandwich. But yeah, missed out on a few hundred to a few $1,000 potentially. But so what, right? Was able to have a good trade right here, follow the plan, and I enjoyed a sandwich after. Very nice. Okay, but we go to the daily chart. As always, there's my multi-year trend line. There's the bull flag. I have my fib levels from the March 2020 low to the January 2022 high. Still have not touched that 23.6 retracement level yet. All right, which is around 418.5. Okay, question is, will we get there? Well, based on the current price action, might be looking like it's not going to happen. It's looking like in the short term, we could be getting a little bit more of a pullback. All right, finally, here we are. Sorry about that. I just want you guys to see my multi-year trend line in a bull flag. Okay, which you guys just did. Now this orange line right here, that's my 410 level. We closed below that. All right, you can see here on the SPY on the 15-minute, if you just look at the orange line, SPY was chopping between that level, 410 to 416.5 is level. We broke down that level today. We got an official close below that level. Intraday, we had a false breakdown. SPY just couldn't clear that 412 level, and eventually at the end of the day closed below 410. All right, I had a level 409.5 to 410 zone, mostly focusing on the 410, but 409.5 to give it some cushion because the levels aren't 100%. Okay, but as of right now, it's not looking good. Short term wise for bulls. Okay, because we're losing a critical level. I consider that 410 a very critical level, which keeps 408.5 possibly lower to 407. All right, this 407 level, I did not mention it in my first post this morning. This was actually mentioned by a group member that pointed out that, hey, 407 was a good level worth looking at, and it bounced perfectly off that level today, which is where SPY found some buying pressure. Okay, it was a previous high on May 26th, and if I scroll all the way to the left, you can see on the pink line that 407 has served as a critical resistant level in the past and a support level. So 407 is definitely a critical level to watch. But if that level is lost, if 407 is lost, I definitely would look for puts. Play it down to the 403 to 404 zone. Okay, that is the let me see. Okay, so that's the 23.6 retracement level. Okay, that on the fib levels that I got here. Okay, because I have two different fib levels. Let me change the color to light blue on this one. Okay, so I have two different fib levels from the January 2022 high down to the May 2022 low. Okay, so 23.6 retracement level on those fib levels is 403.96, but we got to give it a zone 403 to 404. All right, that's a very critical levels. With bear markets in the past, when they cleared for the 23.6 retracement level and they came and back tested as a support, it usually held or gave us a false breakdown and recaptured it and sending us back up and showing us that there's a bottom. Okay, so that 403.9 this level is very critical for bulls. If 407 is lost, we can go and back test that level as a support. And bulls definitely need to step up there. If that level fails, that is extremely bearish. And according to past data, losing that level is not a sign that a bottom is in. And it could be a sign that we head down to a previous lows or even new lows. Okay, so a loss of 403 to 404 zone would definitely put 397 back in play, the multi-year trend line. And if that fails, I think we could drop down to 385. And if 385 fails, we can drop down even lower to possibly a new low. Okay, possibly even lower than 380 this time. All right, but we got to play it level to level. And first support level that we definitely got to watch is that 407 level, which could trigger a sell down to 403 to 404 zone. And losing that level could possibly trigger a deeper sell-off. All right, for me to be bullish, we need to recapture that 410 level. I have 412, 413.5, and 415 as resistant level, but the big critical level is 416.5, and if that level's clear, I think we can trigger a squeeze to the upside. The market makers has been making that a very critical and tough resistant level or zone all week this week. Okay, and they'll do it for a reason. So if we can clear that, I think we could trigger a squeeze to the upside, possibly to 418.5, 420, or better yet, the 50-day moving average, which is around 425 now. Okay, guys, so remember, we need to recapture 410 to trigger any upside move and play it level to level. And as far as the downside move go, I got 408.5, but also 407. That's also a very critical level. All right, guys, so 408.5 is from the high of May 17th. If you guys are wondering where I get that level from. All right, I like to use sometimes I like to use previous supply and demand zones as support and resistance levels. All right, guys, I hope that makes sense. I hope the plan was easy to understand. Trying to keep it as simple as I can. I'm not trying to rhyme, but you know it's rhyming for some weird reason. And you can see here, yesterday we had a false breakdown. It was not the most bullish false breakdown I've ever seen, but I had to be objective as I can and call it what it is. But today we broke back down that triangle pattern and actually tested the 61.8 retracement level at 25.4ish, 44, and got a little small bounce there, but did not and was not able to close back within the triangle pattern. So VIX need to recap to 26.10 to be bullish, which puts 27.5 back in play. We tested as a resistance today, couldn't break through. And of course, if it breaks through, that would be bullish for the VIX. All right, but right now I'm bearish on VIX, just following the current price action. All right, 25.4 is next support, and if that tests again and fails, a nice drop possibly incoming down to 22.4. Okay, I like to use a VIX to help me gauge the price action of the SPY, so definitely worth watching. And okay, so here is the triple Q. All right, I had a support here, critical. Oh, excuse me, that is not triple Q. Here is a triple Q. Sorry. So this blue line here that I was watching is based off a previous high on May 17th. All right, around the 306.5 support level. And well, we lost that level today. Okay, triple Q needs to recapture that level if it wants more upside up to 312.7ish, a previous high right here, and a critical level around 315ish. All right, it needs to start by clearing that 306.5 level. But as long as below, this is a breakdown here, or you could call it a false breakout. All right, as long as below, that puts, you could see possible bounce around 303, which is around the 5-day moving average, or below 301.5. Then I got below that around 296. All right, guys. So above 306.5, bullish. As long as below, bearish. All right. So similar to triple Q, this is Dow Jones. I'm watching that high from May 17th around 327.3ish. That was our support today, and unlike triple Q, Dow Jones was able to hold and close above it. All right. In this bear market rally we've been having lately, Dow Jones been leading the way. So it did not lose a critical level. It held. All right. So 327.3 must continue to hold to keep 330.4, and then possibly around 333, and then above that would put 338ish in play. Okay, below 327.3 is bearish. That would put 325.5, 321, then 318.5 back in play. All right, think of them as equilibrium levels. All right, and here is IWM. We got the breakout of the yellow trend line here today. It kind of back tested as a support to confirm more upside. Now technically this is not a false breakout just yet. It needs to go below 183 for it to be a false breakout. Okay, and if it does, that's bearish, putting 179.2, 174.3 ish in play. Okay, as long as it holds resistance at 185.4 ish, that needs to clear, and we'll put 187 to 188 zone in play, then 190.5. And here's Apple. It did not lose any critical support levels. Okay, not the most bullish day on Apple. It was able to go as high as around 151.7. And it did drop below. It had critical support around 148.4. We did get a wash below it, but it did not close below. So watch that level, 148.4. If that's lost, I'm bearish. All right, put 146.6, 145, 143.3, 144.6. Those are my support levels, okay? And then 138.76. All right, if that level hold, it could be an inverted head and shoulders over here, okay? But we'll see, all right? But as of right now, 148.4 did not lose, so that continues to keep 152.3 in play. And then around 153, that's the breakout level of this blue downtrend line right here, okay? That clears very bullish, okay? Breakouts equals bullish. Now Tesla, well, I had a critical level at 645.5, all right? Also a critical level around 765.7-ish. It tested that level today, rejected, and it closed below that 745.5 level. That's my 23.6 retracement level based on these fib levels right here. And well, That's a bearish close, but it needs to show follow through. All right, because one close is not enough. We could get a false breakdown. That can happen. So bullish back above 745.5, putting 765.7 ish in play, 788, and then 822 ish in play. All right, but if it cannot recapture any of these levels, I'm favoring more downside down to 720 ish, possibly even 701 ish, and 682 below that. All right, guys. So that's what I have for you guys today. Thank you guys so much for watching. You know, it really means a lot. And I'll talk to you all soon.